Hello and a warm welcome. Sustainable finance has seen remarkable growth rates in the Schuldschein market 2021. Almost a third of the market volume was placed with an ESG component for the first time. Can the market sustain this momentum? I'm here with my colleague Yannick Ferber, Senior Advisor Sustainable Finance, to discuss this question. Yannick, from your point of view, what trends are driving ESG in the Schuldschein market in 2022?
Yeah, thank you very much, Uli, for the kind introduction. So looking at the Schuldschein market in a broader sense, we have three main players. We have the institutional investors on the one side, the banks as intermediaries, and the issuers, and all of them under scrutiny. First, looking at the issuers. They need to comply with the Corporate Sustainability Reporting Directive, which will significantly increase the requirements with regards to ESG data. And it will also increase the scope of companies that need to report. Just to provide you with a few numbers, 250 employees, 20 million of net sales, or a balance sheet of just 40 million can already qualify. Then the banks. The European Banking Authority is really putting pressure on banks in order to mitigate the climate risk and to enhance the reporting requirements. And last but not least, the institutional investors. They hear the EU taxonomy already knocking on the door and are heavily investing in ESG data and ESG knowledge.
Very interesting, Yannick. Are there any new developments when it comes to the structuring of the transaction?
So the feedback that we get from corporates is that they really prefer the sustainability-linked structures. The reason for this is that they can use the money as general corporate purpose, which provides them with quite a bit of flexibility. One of the main reasons that has deterred corporates in the past from issuing sustainability-linked financing instrument has been the lack of externally qualified ESG indicators. With the upcoming CSRD regulation, we see that this regulation will act as a catalyst, as many corporates will use the year 2022 in order to make their sustainability reporting future-proof and to align their sustainability strategy with the overall corporate strategy.
Yannick, we are currently observing this discussion of whether natural gas and nuclear power should be included into the EU taxonomy as green technologies. From your point of view, what would be the right definition and the right target here?
Thank you, Uli, for this very interesting question. And just today, we will receive the final guidance from the European Commission whether they will include it or not. And this is, I think, a very interesting discussion that we could have. And I think we could talk hours about what is really sustainability or not. So, taking one step back at the European Green Deal, the ultimate aim was and still is to reallocate capital into sustainable businesses and projects. And the European taxonomy serves as a baseline, providing a classification system on what exactly is sustainable. And the complex discussions that we currently have really pinpoints it to the fact and to the complexity of how complex it is to find generally accepted standards in a diversified group of corporates, countries and interests. And some help that issuers can find is looking at external organizations like the Science Based Target Initiatives, but also the Climate Pledge. There, corporates commit externally to clear climate goals, which are based on science. And we as Helaba are also more than happy to provide you with some guidance and help you to navigate through those uncharted waters and help you on your ESG journey going forward. So please reach out to myself or any of my colleagues in case you have any questions regarding your sustainable financing.
Thank you, Yannick, for this very useful insights. If you want to know more about this topic, please have a look at our recently published research report. You can find that on our webpage. Just follow the link below the video. We hope to see you soon again. Take care and goodbye.
Goodbye.